What's up, folks? Are you hearing a lot of buzz lately about how much money people are making in the stock market? Are you hearing that people are making big bucks in cryptocurrency? Perhaps you heard how a group of Robinhood investors and others shook up the stock market and made a ton of money a few months ago by investing in GameStop. Or maybe you've been hearing stories of all the monies to be made by investing in marijuana stocks. What I can tell you is that there is some truth in all of those stories. Two things that you probably don't hear much about, though, are one, whenever there are big winners, there's also usually some big losers. And two, how did the big winners make big profits? Well, today I'm going to give you my 5 keys to making money in the stock market. So stick around, you don't want to miss today's lesson. First of all, you have to understand the importance of volume when it comes to making big profits in the stock market. Volume is one of the most important keys to seeing your portfolio value grow exponentially. Now, when I say volume, in this case, I'm talking about the number of shares you own of a particular stock. Now, I should point out here that when investing for the long term, your goal is to systematically accumulate more and more shares of a variety of stocks and bonds over time. But for purposes of this discussion, I want to focus on shorter term investments, since you may be hearing about people making tons of money seemingly overnight. The reason volume is so important is that the more shares you own, the less a stock has to increase in value in order for you to realize a larger profit. Let me explain what I mean. If you bought 10 shares of XYZ company at $10 per share, you would have an initial investment of $100 of your money. If the price of XYZ rose to $10.50 a share, then your 10 shares would now be worth $105. That would be a profit of $5 and a 5% return on your investment. Well, that's not very impressive, is it? But what if you bought 10,000 shares of ABC stock that was selling at $1 per share? You would of course have an initial investment of $10,000, but what if ABC stock also increased in value by 50 cents a share? Now your initial investment is worth $15,000, and that's a profit of $5,000 or 50% return on your investment. Now, chances are ABC stock is considerably more risky than XYZ stock, but my point here is about the value of volume. I'll talk more about risk later. The second key to making money in the stock market is low price. Now, low price is a relative term. What is considered a low price for one stock may not be a low price for another stock. When you are a new investor and don't have a lot of cash to start with, you will need to look for investments that will allow you to begin building volume. Depending on where you are starting from, a low price for you may fall within a wide range. In general, you should look for stocks that you can afford to purchase in 100 share lots. Just remember that generally speaking, lower price also means higher risk. But with higher risk can come higher rewards. You just need to understand what you are buying. Some stocks are at a low price because their potential value has not yet been recognized by the broader market, but some stocks are at a low price because that's all they are worth. You need to understand the difference. This leads me to my third key to making money in the stock market: value. When I mentioned a moment ago that some stocks may have a low price because their growth potential has not been factored into the price yet, these are stocks that have value. It may be because they have products in the pipeline that have not yet gone to market, or they may be in a position to take advantage of some pending legislation, or they may hold critical patents that are vital to other companies' success. Or they might have other unrecognized competitive advantages. The point is to find companies or stocks with value that is not yet accounted for in the stock price. Getting in early is how you position yourself to reap big profits once the true value is widely recognized. That hidden value that I just mentioned is what accounts for my fourth key to making money in the stock market, and that is upside potential. In other words, how much growth in stock price can be expected over what period of time? Will new developments propel a stock from $3 a share to $15 a share? Or will a change be marginal, say from $15 to $16? When looking for stocks with large upside potential, you have to go where others fear to tread. You have to go behind the scenes and find the companies that are best positioned to take advantage of whatever business or technology development that may be on the horizon. Preferably things that will have a global impact. For instance, if you believe that green energy is where the biggest growth and technological developments will take place in the near future, then what should you invest in that will have the most upside potential? Should you be investing in solar panels or electric vehicles? Well, in my humble opinion, those two markets have already seen sizable growth and don't present you with the opportunity to acquire the four keys that I've mentioned thus far: volume, low price, value, and upside potential. But if you dig deeper into these same two markets, you might find that there are some hidden gems that will benefit greatly from the next stage of developments in these markets. In fact, there's one industry in particular that could see large-scale growth and simultaneously revolutionize not only electric vehicles and solar energy, but also many other markets such as cell phones, laptops, tablets, and almost any other portable electronic device. I'm talking about the battery industry. What will take electric vehicles and many other products to the next level is battery technology that goes way beyond what is currently available. What will it take for an electric vehicle to go from a few hundred miles to a few thousand miles before needing a charge? Will this leap in range be achieved with lithium batteries, or is there something better in the works? One thing I can tell you is that there is new wave technology in various stages of development right now, and it's not yet being widely talked about. This is an area where you could pick up volume at a low price that has value and plenty of upside potential. Now you should know that this technology is probably several years away from large-scale commercial production, but it won't take that long to start seeing sizable gains. That's the thing about buying volume. You don't have to wait for a stock to reach its full potential to realize sizable gains. And that leads me to my fifth key to making money in the stock market. You must have a buy and sell strategy. Whenever you are buying volume, you should always use limit orders when you're making your purchases. With limit orders, you specify the price that you want to pay for a stock, and your order will only be executed if the stock is at or below the price that you set. With this type of order, you also have two choices for how long the order will be active. You can choose either good for the day, in which case the order will expire if it is not filled that day. Or you can choose good till cancel, which will keep the order active until it is filled, or typically 90 days, whichever comes first. Your buy-sell strategy should also include a target sell price. Your goal, of course, is to make money, but you have to stay focused and don't get greedy. When you see the price of your stock going up steadily, it's easy to convince yourself that it will just keep climbing. Don't fall into this trap. Things can change in a hurry in the stock market, and that stock that was on a steady climb can suddenly turn around and be in a rapid decline and taking your potential profit with it. Again, you should use limit orders to set the price that you want to sell at. This is a good place to use the good till cancel feature. That way you don't have to try to keep up with the stock price every day. Once your stock price gets close to your sell point, set your sell limit slightly below your target. If the price continues to climb and you believe that there's good reason for it to continue on that path, then keep bumping up your limit order to just under the current price. This will help ensure you always preserve your gains and also makes your trading experience a lot less stressful. Regardless of what you hear people say about making money in the stock market, if you practice these 5 keys and make them a natural part of your trading behaviors, you will become a better investor and greatly improve your chances of building wealth. Those of you who have watched my videos before know that I strongly believe that our financial behaviors are the real keys to our financial success or failure. And like I always say, if you change your behaviors, you can change your life. So until next time, behave well.